Hopefully everybody have had an amazing day. Hopefully you guys are looking forward for this now next video. Today's video is gonna be about data collection. You might have seen Amol finally fixed the face cam right here. Sorry, it's pretty late here. Sorry for having this call a little bit delayed, but you know, it took me a while to set all of this shit up. Plus, I've just been so freaking busy today, so I'm a little bit freaking tired. But finally, I'm pretty much hosting this little call. Now, I think this will be very extensive. Of course, if I'm not looking into the camera at all times, just people be chill, alright? I'm going to try to do my best, alright? But I'm very not used to having this face cam, right? But I think this will work perfect. Now, the majority of this call will focus on how you create your data collector. And I'm gonna, of course, big disclaimer here, I'm always doing this from overall how I personally do things, alright? Which is very, very important to note, alright? This is just how I use these things. You can use them in many different ways, many different other ways overall. So this is just going to be how I use it, why I use it, and specifically how I created mine, and from what pretty much I learned from it, but also of course what you guys will be able to learn from it as well. So you can pretty much duplicate the thing I've done. And so I'm just trying to teach y'all how I was enabled to get these results in trading, but how this could potentially translate into your trading and how this could potentially help you guys as well. So like I said, this call will be about how you set up your data collector, specifically how and why I'm using my data collector, how it works, alright, just showcasing it, and I'm even gonna do and collect data on and trade real time with you guys in this video right here. How you improve and how you actually use the data, which is the most important thing. And finally, alright, is how you notices these similarities and how continuously improve your systematic approach. Because what's important is that this, of course, could work for an discretionary approach, but of course, I only use this from my personal perspective and I use a systematic approach. So that's pretty much the perspective I'm gonna take this call from. So the first step for you guys to create your own data collector should of course be to download Notion. That's something you should just pretty much do straight away. After you've done that, the second thing you should do is pretty much quickly go in and click right here, create a new page. After creating a new page, it will be very simple. You'll just pretty much click on database, as everybody can see, just click on database. Now here, you'll pretty much have two options. You'll have empty database or build with AI. So if you, for example, have Notion Plus, as I have, you can of course build your own data collector just using AI, and of course you can use enable using Notion Plus, enable these AI to go through your data. Personally, I don't think this large language model is sufficiently good enough for it to go through your data and for it to research your edge, understand your methodology, if you're trading discretionary, and just go through your qualitative and quantitative data. That's why I'm using another large language model, which I'm not going to show you guys in this video, but at least that's something I use, just not the Notion AI. So just click on empty database therefore. Now when you're here, you're going to have a lot of different options. So for example, some of the people, you can just click new empty database. This is pretty much what I would suggest. But of course, if you're trading a specific asset, you can download a CSV imports from that, alright? And this will enable you to get the open, high, low, and close data, which you then can use to train AI models, etc., etc., if you're into those things. Now, personally, this is something I use, but I, of course, upload it straight into the large language model if I were to backtest a certain strategy, etc., etc. But I'll not go through those steps in this specific video. That I'll take in another video. Now, once you've just clicked on the new database, you'll find new table right here. You can name it to whatever you want. Personally, I've just made a lot of, as you can see here on the left corner and left side, I've pretty much so much data for different models, different things I use, different strategies, different specific concepts, and I'm going to go through this later because this will end up being very, very important for you guys to understand the next step going forward and how I actually was able to, make my model this good, which is currently, right? So this good of an edge, which I'm currently trading. But what you can see right here is you'll find name. You can of course rewrite this, you can do whatever, and you can add other properties. Now personally, I'm going to go through my properties, but this is how you get the table. This is how you get started. Personally, I would recommend having all of these more or less, but for different reasons. Now you can pretty much copy or duplicate mine after this. I'm going to show you also where you'll find it in my server after this video. If you just want to go in and duplicate it, I'll also link the server down below in the description, so you can just click on that, take use of the free content I have there. I have a lot of free, excessive, and very much exclusive free content right there, which I believe no one else in this industry actually publishes for free, at least, teaches for free, which is something I'm doing. I'm also of course hosting calls 15:30 each and every day right there, market open. So join in and see if you like it. Personally, I think you will definitely like it, but it's just a biased answer. Now, personally, moving over to the systematic STA futures. This is overall the futures data specifically, which I've just recently started collecting. So this is just for the financial instrument futures. Now, personally here, I include the number of trade, meaning overall the trade I am on, the current trade I am on, like the real trade I am on. So, for example, if this has had, if I've seen 8 occurrences in the markets, taken 8 occurrences market and executed on 8 occurrences in the markets, I would be on the 8th trade, right? So this is just the number of trades, right, which I'm currently on. Then I of course also have an weekly relation, so just an overall weekly report, which I usually include right here. I've not done it because it's, like I said, for futures is a little bit different. I'll show you much more extensive STA data, but you can see I have a lot of different data reports, etc., which I'm also going to show you guys, which is the thing I'm doing with the data right later. I'm going to show you just everything, right? But then I also include dates. Now this could be important for multiple different reasons. I've previously explained that it could be important just because it will show you the amount of frequency you're taking setups, but it will also show you potentially the dates where you have the most probable setups. It will also of course give you a monthly ROI. It will help you with it. Just a lot of different general things, which is very, very, good. Um, Now, of course, similarly, the asset you're currently trading on, I have par here just because I've duplicated my STA data here onto here, so that's why. But this should say asset. I'm just gonna rename it here quickly, right there. So asset. So specifically Nasdaq here. This just so you know which trade you have executed on. Now, of course, session you'll also have right there. News, of course, which is also important for several different reasons, which also something I include. So I have big news, medium news, no news, CPI, PPI, FOMC, and NFP, which I include in this data collector. Now, personally, this is of course also important for multiple different reasons, notably just because it will show you if you're outperforming trading news or if you're underperforming trading news, which of course will enable you to change it depending on if you're underperforming or overperforming. It's pretty self-explanatory, but also of course if unexpected things will happen is usually because of news, and then you'll just be able to add those news. So when you go back and see potentially your trades, which is something I'm going to show you right here. Like go back and check your reports overall. It will enable you to just see a lot of more quantitative context towards the trade. Now, of course, another thing I would definitely add is just a weekly, daily, and 4 hour, 1 hour and 50-minute overall order flow or bias, meaning the bias you have established on all of these. Notably, your model should be independent of your bias, but I think this definitely is something you should include since it gives you a lot more context itself. And of course, when you go into specific matrices or measurements, you'll pretty much be able to see, for example, if let's say you have majority being bullish, like majority of the order flow being bullish, and then you have like weekly being bearish, and then you see like you have a mixed bias on that week, and that potentially could have led to a loss, etc., etc. And I'm going to show you how you look at these similarities and differences between winners and losers, which for you to establish pretty much relationships between your winners and losers, which of course will enable you to improve ultimately your model, which is the thing you're wanting or you should want. And of course you have an up-down bias, it is just over-up the bias. This will also enable you to see if you're wrong on a bias, etc., etc., because you know you're gonna go back in hindsight and then you're gonna see if you had another setup, etc., etc. Now, of course, you'll have the drawn liquidity. This is self-explanatory. Of course, I have drawn liquidity and also pretty much what I execute on. Now confluences as well, etc., etc. Also the re-entry confluences, time frames I'm using, execution time frames, the number of pips overall, or 0.0 percentages, because this is an asset Nasdaq, right? Similarly, also the amount of take profits hit. You can see I've actually performed very, very well trading um, and executing my model currently on Nasdaq, right? So I've really done. You can see I've only taken winners and 2 break even, so no losers as of yet. But currently today I actually took a loss, and this is the thing we're gonna annotate that trade. Now, something I would definitely also suggest is for you to include a lot of freaking pictures. This will help you analyze all the freaking steps, since, you know, it will just help you go back in time and look through the data, establish relations which you have not previously seen, and also enable large language models to analyze your model, establish relations, the same thing as you would have done previously as well. Something which I would definitely also recommend is adding properties to your data collector. This is simply because you can add matrices, you can add win rate, loss rate, you can also add overall your average RR. This should pretty much enable you to make easier calculations. For example, if you are to use a multi-calorie simulator to simulate max drawdown in your simple trade, in a trading model, etc., systematic trading model. So simulate the max drawdown you could have ever occurred, which of course enable you to risk less, risk more, adjust your risk basis, or other sort of measurements. I would definitely recommend you adding these properties because it will just enable you to see things better. Similarly, I would also add a property just seeing pictures of your model playing out. This will of course enable you to simply look at the trade, establish relations, of course, much easier. And since you'll of course remember some of the trades you have taken, you remember the price action you have traded, and so you can just check back on this, you can click on it, and you can just go back and look at the relations, look at the differences, etc., etc. Similarly, I have also a timeline which I've established. This would just enable me to just look at the trade frequencies. As you can see right here, I usually take 3 to 4 trades each and every week, which is of course very, very high frequency for me, but it's just because I've just started trading Nasdaq futures, and so I would not even describe myself as profitable trading Nasdaq. I also have, of course, a win-loss ratio right here, which is just simple calculations of win-loss break-even. Similarly, I have also this measurement of winners and break-even. So currently I have more or less an 100% break-even win rate, but that's not realistic, since you're gonna be more realistic when we're up in the 200 data range. That would be more realistic, and I think that was gonna provide a much more uh, reasonable statistic for my win-loss break-even ratio. Similarly here we have simply the RR ratio. I'm going to show you much more extensive matrix later, establishing and looking at my uh, Euro USD data collector, which of course is in the 100s. It's just my more recent one after I've pretty much upgraded my models. Similarly, I have also a board here and bias. This is just like I said before, this is just for you to establish relations, etc., etc. So I definitely recommend this as well. Adding it, and of course measurements. You can just add different measurements, etc., etc. Take away different measurements. You can see right here. You can just add this, or you can just adjust this, right? Which is very, very good. Now moving into the real data collector. This is of course my Euro USD trades, all my Euro USD trades. Like I said, it's up in the 100s. This is just my recent data collector, so it's from 2024. And it just calculates all my trades from 2022, 2024 and 2025. So as you can see right here, this just enables me to look back at all of these trades, look back on them and just click in on them, just focusing on the data. But I'm going to explain actually how I'm using the data later and how I'm actually establishing relations between winners and losses, etc., etc. And I'm going to actually show you 2025 data reports of the 22 SDA pluses I've taken this year, and how I established these winners and losers, distinguish how I was able to distinguish them, yada yada yada. So I'm going to show you all of. Similarly here, you can see I have more or less the same grid, same layout as you can see. Only difference being I have just a lot more data on this. So like I said, I have data up to the 100s. And here I have also added an relation weekly overall bias, which is something I've not added on futures yet, since I've always, pretty much, nearly always the same bias. And you can see just how this looks. So just pretty much go a little bit into detail and a little bit more analysis, which I've previously done, establishing relations, etc., etc. What I'm looking at. I don't know why these pictures are not loading. Potentially have too much data on Notion now, but yeah, this just I can show you here. This just I can go back to, for example, 2022 July and go back here and just see what pretty much I was actually looking for happening in, of course, yields, the dollar, euro USD, the relations I had, the interconnections, the correlations, the cycles I was looking for happening, etc., etc. This is also something I include in my data collector, since this is also, of course, but this is another type. This is more qualitative data and not quantitative data. This is not focusing on numbers, trades, models, statistics, etc., etc. This is instead focused on bias, which is more qualitative. It's more what I believe in, right? It's not what I trade. So that's important to note. But of course, nevertheless, provides a little bit more context if you're actually going to train your model, and of course, enable you to get better, right? So something I actually forgot to show you about my futures data and all my data in general is that I have also trading reports, so all individual trades. This is not just the data, as you can see right here. I have also a little bit more qualitative and quantitative data, but this is located underneath. So you can see for all trades, I establish reports. I write reports of my trades. You can see right here, pretty much going into key levels, going into more numbers, since of course that is pretty much what I'm after, going into dark pools, etc., etc. Volume of the dark pools, especially so I can establish these patterns or locate these patterns later in the markets as well, locating these fundamental patterns, correlation patterns, etc., etc., for me to enabling me to create these different confluences or concepts, etc., etc. Help me overall further um, excel in my trading. So you can see right here, this is just an example of what pretty much I've included here. So just talking key takeaways, dark pool, volume patterns, etc., etc. here as well, summary table, and suggested focus for refinements. This is something I usually include as well. So right now we are just going to collect the data on a real example. I'm just going to show you a real example of how I would collect data, what I go into detail about of a trade I actually taken. So just loading up Euro USD right here. I'm just actually going to go through a real-time example, real example of a trade I've taken and how I would collect data on this trade, going into detail about the things I definitely would include and the things I actually exclude. Specifically, what you will notice is that I don't journal. I don't focus on the less important stuff. I don't focus on feelings. I don't focus on how I felt taking this trade. Instead, what I focus on is literally the qualitative and quantitative data, the real things, the defined, the contextual stuff, the COT, the data, the fundamentals back in this trade, what I was believing would happen, but also independent model and how it played out, right? Since this will enable me to look at those things, look at if I should exclude thoughts, if I should include other things, if I potentially, should have changed things up. And I'm gonna, of course, like I said, later show you how I actually improve my models, etc., etc., through these extensive data reports later. So before I go into the lower time frame structure of things and how I structure my model and how simply I more or less decide which ways my model is independently gonna be structured or gonna be overall focused on. Since my model, big disclaimer here, is independent of my bias, is independent of what I believe will happen, which is very important when having a systematic approach. Is what the system says or tells you to do, that's exactly the thing I'm gonna do. So if my system occurs in the markets, I'm gonna execute, even though I think it's a bad setup, etc., etc. If I see these step-by-step things playing out in the markets, I'm gonna just execute on it since I know it has a statistical edge. All right, how I place the trade in the market, or more or less how I build up the context behind the trade, is very, very different though. All right, and I use mostly fundamentals to execute on a bias, right, or more or less deliver a bias. And I've actually designed it so the fundamentals behind it is more or less also quantitatively defined, meaning they're defined using numbers, they're defined using equilibrium positions in the markets, etc., etc., which will enable me to find these draw on liquidities in the markets systematically itself as well. Now, I'm not going to go in detail about how I find these fundamental imbalances, but I'm going to give you guys a little bit of context and a little bit of thought process, of course, also so you can take it with you guys when you're actually trading out, since this will overall occur over the coming months, over the coming weeks, etc., etc. So you will notice these things happen in the markets, or at least a lot more people talking about them. So I'm just going to quickly show you this interest rate differential. So here you can see the dollar, and behind it the data for the interest rates. As you can see right here, this is just derived from Forex Factory, super simple. But as you can see, in the start of 2022, they more or less started raising the interest rates in the US. As you can see, they rose it up to 5.5% or 5.5 basis points, and now they've been pretty much cutting it, starting 2024, etc., etc. But now they have not caught it. All right, they have not caught it. They have pretty much kept it at 4.5 basis points. Now, what I want with this is simply that this alone, of course, proves that the purchasing power should go down for the dollar, but it does not describe to an extent the amount the purchasing power should go down. For you to enable and for you to look at these things, you need to look at the PPP, and you need to compare interest rate differentials. So just this alone won't enable you to know where the dollar will go shorter term, but comparing this to other interest rates will enable you though to come to a conclusion about interest rate differentials and where we realistically fundamentally should see an equilibrium for the dollar getting formed and its purchasing power compared to other currencies, and therefore enabling us to more or less predict where the currency exchange rate will be in the future. Now, like I previously said, everybody, you can see that the dollar actually has, or the US actually has the highest interest rates, higher than, for example, the euro. And if you just establish the relation, which I've previously shown, that when you see a rise in interest rates, you usually see a rise in that currency's purchasing power, since the amount of dollar gets locked up, and you see the overall supply of dollar diminish since there's more stored value for dollars. There's going to be more people holding dollars, which will just diminish the supply, which will of course then increase because you also have demand for dollar, which since the same demand but smaller supply of dollars, you're going to see the dollar automatically rise, right? Similarly, when they cut rates, we will more or less see a sharp decline in currencies. That's the direct correlations. All right, since there is less store of value, etc., etc. Now, of course, this establishes the long-term factors for the dollar to fall. And yes, this is my bias. I'm more or less looking for the dollar to fall long-term. However, like I said, the euro has, or the ECB, this European Central Bank, have been cutting rates faster than the US Federal Reserve. All right, and I'm just going to show you the graph here as well. So looking at the graph here, you can see they've pretty much been cutting while the Americans, all right, have more or less not caught at all, which I previously shown. All right, they've more or less stagnated it. which just shows us that the short-term / intermediate term relations shall be an bullish dollar compared to, for example, the euro, which should be diminishing, right? This is not what we have seen though, all right? And of course, this is not something I'm going to showcase of how you actually establishes these highs and lows in the markets, etc. How you top tick, bottom tick, etc., through using these things, through using different regimes, etc., because this is what I found through data, of course, which I'm going to show you guys later. Yeah, so I'm not going to show you this, but this is just the context behind the trade, so you don't think I'm just foolish for just shorting it, since I'm deploying my model in short buy. Therefore, now you probably will end up seeing us delivering lower for the euro now in the coming next days if it gets confirmed. Now, how it gets confirmed is just 2 weeks lower for me. But let's go into the trade. So let's actually go into the 5-minute time frame once again here, and let me just explain why I took the trade, or other reasons why I took the trade. So as y'all know, since I now have confirmed my overall bias statistically, right? I confirm my bias through overall looking at the regime shifts, etc., but also levels, etc., in the markets to confirm it. I'm always go into the lower time frames, and I'm always look for just a simple total soup. All right, simple as that. So once I see time-based liquidity getting swept right here, I was more or less looking for a short. So therefore, since I know this is a terminus, we've talked about terminuses, this is a terminus and this is a terminus, the next higher low shall be here, and then we shall drop down lower, or in this proximity. I don't necessarily know where. Similarly, I also established this through levels. As you can see here, I'm going to show you this 1 hour level right here, which will just pretty much top tip the bottom, the market right here, and just enabled me to execute on this. Now I'm gonna just show you the FTMO executions. So right here, you can see I shorted right there. This is for the Euro USD, and I more or less was fully out here at a 126, as I showed. This more or less made me 6.4k profits. So substantial amount, which is fairly good. But just moving on to the data once again. So how I would collect data on this trade is simply by placing, of course, the relations here. This is something I'm going to do after this call. But of course, also simply doing the date. And I took this on the Tuesday, as everybody saw. Tuesday right here, 8th of. It was taken on Euro USD. It was also, of course, taken throughout London Open, London Close. And of course, we did not have any extensive news events, so we'll annotate no news. This was a bearish STA, so I have different colors for example, if it was a bullish STA, I would have uh, a blue STA. If it was a bearish, I would take an purple. Now, of course, throughout the monthly relations, we were actually bullish, as you all know, for the euro on a month-to-month basis. We were overall bullish for week-to-week relations for euro. We were, of course, bearish for day-to-day, and we were bearish 4-hour and bearish 1 hour, but of course bullish 50 minutes. And I'm gonna show you this right now. So going in here again, you guys can see right here that the monthly was bullish, right? We're looking for month-to-month closes to be bullish on average, right? So we're just looking for higher prices up to these levels right up here. On and week to week, we are of course also looking for a little bit higher prices, right? Since you can see right here, we don't know, it has not shifted yet. For me to shift on a weekly basis, it needs to be 2 weekly down closes for me to have shift buys on a week extensive. And this goes for all time frames. This goes for monthly, etc., as well. For the daily, we had seen 2 prior bearish days, so the daily was bearish for me. Confirmed, as you can see, 1 2, and then I was looking for this to sweep right here and then down prices, as you saw. Same thing goes for the 4 hour. It was also bearish. 1 hour also bearish, and 50-minute, as you can see, was actually bullish. As you can see right here, was bullish leading up to this short. Now my overall bias was of course down. Was focused on buy side liquidity, so I'm adding that buy side liquidity since I was focused just on engineered buy side liquidity. My drawn liquidity was just equal lows, as you can see, and just some sell side liquidity. I executed on algo locking levels. This was the confluences was simply Asia, the previous daily high sweep, so previous daily high sweep. My re-entry confluences was simply algo locking here as well. I used all of these time frames when I executed on a trade to find level alignments, etc., etc. The stop loss, how many pips was the stop loss? 4.6. So it was approximately 5 pips. Take profit, of course, it was a 126, so it was approximately 30 pips of a run. And then, of course, this ended up being a win. And of course, I'll just add in this pretty quickly, but it's just boring for you guys to watch it. But I'm gonna just take an example right here. So you can see right here, this was a simple trade, right? Well, actually ended up being a loss, as you can see. But very similar to the one I showed you guys right now, which is a total soup. Just try to total soup this, but of course this actually ended up being a loss for me. You know, what can you do, right? So yeah, this is how the pictures look. So very good to note. So now, as you can see, I've also filled in the data right here, just written report, as you can see, and added in the pictures, yada yada yada. We're just pretty much done now. Oh my gosh, this feels so good. I'm always that happy when I've done these things, you know. But let's just move ourselves over to how I'm actually using this data and using this information which I'm collecting on each of these setups, alright, which is so damn important and which is pretty much what no one does, alright. You're all expecting freaking to earn more than a doctor without putting in any work, alright. I'm freaking putting in so much work, alright, doing this shit. Alright? You gotta really, earn as you deserve, right? You deserve as you earn, right? So you put in freaking work, alright? You do both quantity and quality, alright? Both are the things, and then you pretty much get what you deserve. So of course, we're gonna just jump into the data report for 2025. This was the data report I did for my students. Alright, it was pretty crazy, pretty extensive. You guys will pretty much love it. So I just pretty much analyzed all the trades I've taken. I went through them, went through all the charts, went through everything. Alright, established pretty much, as you can see, an overall report of the things I needed to improve. So you can see this was the performance. This was pretty much the tree. This is my model in essence. So you can see the model is right here. This was the winners. This was the losers, etc., etc. This was the equity curve. So you can see it stagnated here at around 45. This was when Euro more or less went into its momentum regime. This is the thing I call it now when the fundamentals is not perfectly aligned with structure. But now I've changed that, I improved because I looked at the data. Do you think I would be able to improve those things if I was not collecting data? No, I would not. All right, so here are also some other metrics from the data, etc., etc. So you can see I went into the similarities between winners and losers. This is what you gotta do with your data overall for you to be enabled to improve your system. Then of course I went through what I needed to improve. I went through improvements which I had not implemented, and then I went through the upgraded STI. I'm not gonna show you the upgraded STI. This is secret, guys. Uh, yeah, it's actually top secret. But why would I expose my edge? You can see my old edge. This is my freaking new edge, but I've just improved it through looking at the data now. This is what you guys really need to do. So now I've shown you everything about how I collect data, why I collect data, and how you even create a data collector. So guys, get to work. Anyways, thank you all so much, and I'll see y'all in the next one. See y'all. Bye, guys.